The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft. Once more, do we go into the breach, dear friends? And we're off about 12.5 points on the S&P cash. It's been kind of a wish-washy day. Certainly a lot less volatility than the last few weeks. 2.43 billion shares. So we're kind of back on to the volume that we probably, I would call it typical, if not even a little bit more than typical. But I think, we're probably just getting into this thing. We're going to be waiting for earnings. We're going to be waiting for the FOMC, and we're probably going to have a couple of slow days. And we'll see what those bring. In the meantime, I am all cash and loving it. We sold our positions out on Friday. And now we're going to see what, between the Fed and earnings, what happens. I can't tell you that I've got a good grasp of what's going to happen, but I will react and not try to predict what is going to happen over the next 2 days. I'm pretty good when it comes to looking and seeing what a market will do. I'm pretty bad when it comes to figuring out what a handful of pseudo-politicians at the FOMC is going to do, or what they're going to say, or how the market's going to interpret what they say, either good or bad. And so I'm kind of just going to sit back and see what happens, and then I will react to their actions. Anyway, I hope everybody had a nice and wonderful weekend. As always, we come to you between 2 and 3 on TFNN.
The following takes place between 2 p.m. and 3 p.m.
But we always like to kick this party off with a little bit of history.
And it's all just a little bit of history repeating.
This day in 1890, journalist Nellie Bly jumps off a train in New York City exactly 72 days, 6 hours, 11 minutes, and 14 seconds after she boarded an eastbound ocean liner to prove she could circle the globe faster than Phileas T. Fogg, a fictional hero. Jules Verne around the world in 80 days. Among many of the modes of transportation Bly uses to circumvent the globe are a burro, a horse, a sampan, a rickshaw. Her daily dispatches and the astonishing speed of her trip enthrall newspaper readers and make the world seem small for the first time. If you know a little bit more about the backstory on this, once she left, another lady about 2 days later, after seeing all the brouhaha, decided to get in competition with her, and for a few days was actually in front of her. And she pulled a little stunt to make sure that the competitor did not get back to New York before she did. But anyway, on this day in 1890, they thought that they were catching an airliner to go around the world in 72 days. Of course, now, if it was 72 hours, people would think that it was slow going around the globe. But hard to actually say. A lot of interesting stuff actually wasn't happening last week, but as soon as the bell started to close on Friday, started getting some very interesting information. We've talked about how some of the solar stocks have really been hammered after the first of the year. And started digging back into it and started seeing that there's a little bit more to those solar companies going down that beats the eye. The first thing is Nevada, the gaming state, is no longer gambling on solar power, at least at retail. They have decided, like a lot of states, that this is probably not going to be a great year for seeing lots of cash come to them from the stock market. And they are already starting to trim. What they are doing is the net metering. For a while, they were paying retail prices for electricity for anybody that would generate it. They are not. They're going to now go back to the wholesale price. So, good on all you folks that were selling power back to everybody. Guess what? The market is starting to react, as it always does. And as Mr. Buffett says, you can always tell who is out there swimming without a bathing suit when the tide goes out. And here it has gone out. We'll talk more about this on the Friday show with Tom O'Brien this week. But not getting your top cash anymore for all that extra power. And my guess is this is just a long slog before many people are going to say, well, you know what? Kind of like recycling. The only thing that actually pays for itself in recycling is aluminum cans. In fact, I think the last time I looked, 75% of everything that you put in those bins to be recycled goes into the same landfill that the other bin that we have does. We spend some $15 billion in recycling and additional fees to separate everything, only for it to go back into the same landfill. Everything is more expensive and more pollution prone than just doing things like using paper from tree farms, because of course you have to bleach out all the ink, which is far more problematic than actually making the paper in the first place. So a lot of things that people do to feel good, of course, really do not work in the end or make economic sense. And some states with especially still pretty bad hit is Nevada, cannot any longer afford to just throw money away. Had somebody actually ask me a question on Friday, and I didn't get to it, but they ended up sending me something, and I said, well, there's a problem here with your math, and that is the NASDAQ 100 is not 100 equities. It's 107 equities. A lot of these equities have B and A shares and C shares and D shares. And when you actually add it up, there are 107 equities actually. And they were dividing by 100 and couldn't figure out why all the work they did in their spreadsheet did not work out. I said, you need 107 equities. Now, the NASDAQ 100 is 100 companies. It is not 100 stocks. It's 107 stocks. Just thought I'd bring that up. Most people don't believe that or know it. No, I don't know if they don't believe it. They probably just don't. If we want to talk about the 2000.com fiasco coming back to bite us in our wonderful rear end, T. Rowe Price has got the bulldog on its rear end. They had, like most of these broker dealers, are going to have to mark to market. And in fact, they were forced to by the SEC. And what we know now for what they buried in Friday's close is a huge markdown on most of these stocks that are not public yet. Dropbox had the biggest of their price markdowns, but the .com bust has already happened. The difference, it's happened in Silicon Valley, but not to the investor at large. We'll be back more and talk about this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And it's kind of interesting. There's a broker dealer called Second Market, and for these stocks that are not yet public, that are still private, you can actually trade many of these stocks across it. And of course, what the SEC is now saying is that even if there isn't a great deal trading, that if there is any kind of market for it, you have to do the mark-to-market. And of course, why a lot of stocks were totally worthless in 2000, I guess is probably a good thing that we're starting to see markdowns, at least in the broker-dealer community. The venture capitalist folks themselves do not have to, of course, mark their stuff down. But a good indication of just between the third and fourth quarter, how far these things did come down is in this chart. We'll probably talk a lot more about this with Tom on Friday. But I think the dot-com boom bust has already hit the bust cycle. These companies are not totally worthless like so many were in 2000, but probably a great deal less. The one that disturbs me that they did not have, and maybe some of the things that are going to happen fairly soon, are the broker-dealers like Goldman Sachs and others that we didn't know that were in something like Uber. When it gets written down, when it's got a ludicrous $40 billion value, and other stocks that are just super high value, again, you can see who's not wearing a bathing suit when the tide goes out. But probably a good thing they didn't get these things into people's hands before everything blew up in our faces. It is a mad market. I was talking to Steve Rhodes, Professor Steve Rhodes, before the show, and kind of interesting to see Now that I have daily short volume, what's going on with them? Probably SWSK, if you can type it. SWKS. Yeah, Skyworks Solution. Friday, this was maybe one of the most heavily shorted stocks as a percentage of the shares out there. And we were kind of talking a little bit, but, we've got Apple reporting. And my guess is that there are a lot of people now starting to put peripheral bets out on a lot of stocks. Of course, we saw a great deal of shorting in Friday's action. And of course, it was all for naught by the end of the day. Most of the shorts had blinked and it closed at the high of the day. I guess if you're thinking about shorting these stocks, I just don't see the gravy in waiting for a stock like this that's come from $88.62 down to $58.50. I want something a lot more in the line of a 50% retracement, and that would be right there. I mean, is $33 is just a 50% retracement, 77.05. Hard for me to believe that I'd be shorting a stock as soon as it bounced so little out there, but a lot of extremely active people. And my guess is, as we brought up in the conversation, a lot of people trying to go after the periphery of Apple and earnings into Tuesday without being smack dab in Apple itself. I still think that just because you get a bounce doesn't mean you need to short it. We're probably looking for a great deal more. And I would probably be looking at that 73.51 area and maybe as much as the 618 at $77.05. We've got John from Philly. And how you doing today, John?
David, I'm doing pretty well. Hope you're doing the same.
If I was any better, I'd be twins.
Excellent. Say, I wanted to put this topic in front of you and see if you had any thoughts on the matter. We are coming in this week having we've had a 4, 5, 6% bounce in the S&P and the NASDAQ 100. And, of course, this week we've got earnings coming out of Apple, Amazon, Facebook, and Microsoft, and I think Google's next week. Mm-hmm. And just to observe, over the past 4 reporting quarters prior to this, the stocks of Amazon, Facebook, Google, and Microsoft all gapped higher at least 3 of 4 past earnings releases as, forget the reasons why they just did. Yeah. My question, is there any way that you can help us think about the odds that this earnings go-round, that the odds will be of not gaps higher, but potentially gaps lower on earnings reports in those selected names?
I would say, first of all, almost all of these companies have had their earnings estimates move severely down. They did that in the last couple of weeks of December while nobody was paying attention. So the question is, are they going to yell out and say that they beat expected earnings that had moved down quite a bit from just 2 weeks ago? And that's where you get into this expectation game.
You're right.
And the other thing is that especially these big companies, if Apple needs to make its numbers and they kind of know that they're going to be light, they'll just let the quarter go another couple of days, right? I mean, they're bringing in some pretty big wood. So if they were going to miss just a little bit, I don't think they're going to miss a lot, but if they were going to miss a little bit, they would have just moved the quarter out a couple more days. And you're not going to know until earnings day. And probably you're going to have to dig through mounds of paper, which no one does. And that's why I really can't tell you what they're going to do. A small company, you get 2 more days in the month, it doesn't matter. A large company can make a huge difference. They can also move cash around that they have all over the world to make things look better. And that is the problem with financial engineering with these large companies, too. Could they make this quarter look good even though it is not? Pretty easy to do. In a year from now, if we continue in a bear market, pretty much becomes impossible. But a lot of times, especially right now, especially at the very start of a bear market, you get a lot of robbing Peter to pay Paul in the income statements.
Right.
And that's why I'm all cash right now. I do not like not knowing what these guys are going to do. There's enough money they can slosh around, at least for a couple of quarters. And also, we don't know what the Fed's going to do and how they're going to come out.
Sure.
And that's my guess, though, is the Fed is going to come out dovish. The earnings are going to be just okay, and there's going to be way too many shorts in the market, and they're going to have to cover, and that's going to get us moved back up to higher prices where I will then short. I would not be going long these things, but I am hoping for them to catch a bunch of shorts way deep, which is a pretty natural kind of occurrence in the bear markets I've been in. And that is everybody just piles on, piles on, piles on. And eventually they quit shorting. And that's exactly the time that you need to short. We'll be back in a minute.
Thanks so much for that expose. I appreciate it.
You bet. Yeah, I think we're probably going to get a bounce that more people, or bigger one that most people think. And we'll run the shorts, and then it'll be time to short yet again. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And last week, thanks for John and the Den bringing back up. We were talking about earnings today, or this week from last week, and the stocks that I was most interested in. and not that I was going to play them, but they are the canary in the coal mine kind of stocks, and that is Packaging Corporation of America, an international paper. And I didn't know about WestRock. That's a good find out there, Mr. Z. WRK. But these companies make all the cardboard for us to ship our products in here in the United States. So when they are doing well, you can infer, and the business is getting better, you can infer that the economy is getting better. You can also infer when their orders are down that orders are not doing well. New products are not going to be selling well in the coming months and maybe a year. And they act as the canary in the coal mine out there. Of course, huge, what are they off? International Paper off 10%, Packaging Corporation America off 13%, WestRock off 13% or 14%. But you can learn a lot from these companies. They don't tend to move probably pretty much at a glacial scale. I thought that they were probably going to be down. I didn't know that the downgrades would be so severe in these companies, but also pretty bad. I think there's more to it than just these particular companies. I think it had a lot to do with the numbers out from the Dallas Fed and manufacturing in Dallas, Texas, and to show just how far the cutbacks in the oil fields are affecting one of our largest, it could be a country by itself, couldn't it? Texas would be a fairly large country just by itself. And of course, all the business, especially in Houston, that they make all the things for drilling oil wells, not needed if you're shuttering every one of your fairly expensive fracking locations. But and I don't think you probably wrap a lot of that stuff in cardboard. But I think it was kind of the 1-2 punch of a lot of the Dallas manufacturing indexes and numbers coming out, and probably the information coming out today in these also. Again, I don't really have a good idea, and we do have this kind of semi-deficient loop of these analysts moving down the estimates just a couple of weeks before all these stocks come out, and then saying, woo, we beat. It's a limbo bar that only goes up, not down, which kind of makes you think that there's a lot more to it. But that's why I think there's going to be a lot of rosy talk about, it's not quite as bad as we thought. But again, we moved the limbo bar up over the last 2 weeks, and no one really said a great deal about it. And that's where, 3-day weekends and Christmas make it very easy for weasels and the skunks and the spineless of Wall Street to come in and do their dirty work while no one is watching. But all these stocks looking pretty bad. This one has blown through what will be the last major low out here, the October 15th low at $57.06 that had 3.1 million shares. We already have 2.5, so I'm going to say that we're probably going to be close to a 4 million share day. And see if we go back a little bit farther and see if there's anything else. I mean, you got a pretty nice run now to about $37 without a great deal of work just for it to come back down into the 2013 February lows that we see on the far left-hand side of the chart. What else do we have out here? I had some stocks I wanted to look at. McDonald's, of course, did come out with earnings. Apparently, people eating pancakes at 4 in the afternoon has turned out to be a wild success for McDonald's. They did gap up on the earnings up here. Energy is a little bit less than what you would think. And there was some pretty good discussions on CNBC today about the relative worth of going along something like McDonald's and or a Chipotle. The one thing that they probably didn't bring up too much, though, is the fact that maybe all of this is in there now, and you're really going to have some kind of other product to really get these people started and moving. You had a nice consolidation move that took quite a while, going back to 2013. It's broken out of it. It did it with a giant sign of success and strength. The downside is that to buy this, I would certainly have to be back down around the 107 level in these stocks. I think, did Procter & Gamble come out? I think they were coming out also. Maybe that's tomorrow. I think it's tomorrow. And again, these companies probably going to do okay. I'm not expecting a great deal of nastiness in their earnings. I think they're out in the morning, actually. We talked to somebody last week. But of course, any of these companies, Burger King, McDonald's, anything that's down market, probably going to get a little bit more business as the economy pulls back. I would probably be much more thinking of, stocks that have still 40-to-1 PEs like Chipotle, CMG. It was down kind of a lot today. I think Chipotle was one of these stocks that had all the three gaps that could still get filled. When you still have the ones that can get filled back down here. Do we need to get a little bit more? I think so. We've got that, what is it, at about, I'm going to call it about 320 to 340. And that gap goes back to, what is that, April 19th of 2013. When these things get going like this, it's going to be tough. Traditionally, when people have had, or companies have had problems with their food and food quality, as Chipotle has, it normally is kind of a 6-month deal before you find the low. And I don't think we've had anywhere close to that kind of time to come back through this. And they still have the problem with whether or not they're going to be able to deliver the food that they said is the reason they exist. I'm not a big fan of paying double for something that everybody says has been massaged like a Kobe beef. But their food with, what does they say? With food with quality, food with integrity. Their blowhardy motto, food with integrity, is something that might come back to bite them in the rear. And of course, anytime you say something like that, it's almost daring the food gods to poison your food. But I still, we kind of first tested that first gap. I think if the market continues to pull down, the first level in this would probably be somewhere around that $370 level. When we come back, we'll look at some more stocks, mostly for the ones that we were talking that should have bounced last week. Try to wrap it up with that. And again, probably a slow couple of days out here. I'm going to be waiting to react and not predict what's going to happen after the Fed.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I wanted to look at potash first before we go to our scans that we talked about last week, see how they did. Just caught this on my radar this morning, and looks like it's going through some multi-year lows, but it's going to do so on fairly decent volume out here. Looks like the dumping of potash is not going to stop anytime soon from the Russians. They need cash, and they don't care if they're actually making money as long as dollar bills are coming back. That is going to be a real problem with POT. And we see it breaking to new multi-year lows yet again today. We talked about Buffalo Wild Wings last week. A lot of these stocks, I didn't like the energy that they came back down on or the tests of previous lows. But, you know, we've got kind of these stocks that look like they could at least start probably having a little bit of a bounce. Of course, you got the Super Bowl games, Final Four. I'm hoping that the news improves well enough that this fills most of this upper gap in this, and then I'm able to pull the trigger at 175 or something, maybe 178 on a short on these. But that's the problem, is a lot of these things have come down. They did test their first low with lighter volume and then head back higher. We talked about the Cooper companies, kind of like this one, contact lens business, if I'm not mistaken. This was one that you could probably see a nice little bounce out of. Not enough for me to play it, but the December 4th low, 4.9 million shares. Of course, we brought this up with less than, well, around 900,000 shares. So about 1/5 of the volume last week as it tested that previous low. Went below it, closed back in the trading range. So you're probably going to have a few days. Could this drift up to $140? It could. And if it did on very light volume, you might see a nice trading range from about 140 to 120 set up in that. Focus Energy. A lot of these energy stocks look like they have tried to make some lows out here. Not a lot of bounce in as many as you would think. Seeing action on Friday. What else? Well, we were talking about products that would probably be doing well in a downturn. Edgewell Personal Care Products, EPC. What did they used to be? I think they used to be Eveready Holdings. if I'm not mistaken. Let's just look them back up. Pretty sure this is. Google Chrome, always use this app. Okay. We're doing that. What do we have? Wet shave, sun and skin care, minimum care, infant care, care, Wilkinson razors, Schick. Okay. They're not Gillette. But I think they had, I don't have time to read this whole thing here, but kind of interesting. Now, this one actually looks a little bit better. What you have to dislike is this last leg down with more energy. But it did break its previous November 13th low. That was $72.44 with 2.5 million shares, 1.3 million shares on the 20th. And it's kind of messed around, gone a little bit higher out here. But again, a lot of these stocks probably not setting up all that well. The energy bear, of course, blew out its previous high, the ERY. It got back up to the August 24th high at $40.52, 3.4 million shares. Broke out, had a little kind of almost an abandoned baby up here on the 20th, and it's come back into this trading range. I guess going to be a lot of people probably still tapping on this door, but at least you have one test, and it looked good. It's back into the trading range. What else do we have out here? The Hong Kong index, we brought this up last week, along with the Japanese indexes, and it looked like maybe these guys had made a little bit of a low. As we check back in them now, these had gone back and tested the August 24th lows on the EWH, which is the Hong Kong fund, $17.57, 16 million shares. Pierced it on January 20th with 10 million shares, but have gapped up the last couple of days back higher. But again, almost all these indexes have high energy on the last leg down, and that means, for me, no touchy, and watch out. Halliburton, which I think comes out this week, is back in its trading range. Unfortunately, it did break its lows, and the volume was too much for me. It wasn't higher, but it wasn't significantly lower. The August 24th on it had $30.75, 24 million shares. Broke it with 21 million shares, which is, it's not as bad as you think, but not great. Again, energy pretty good down into this low, which connotes more of a consolidation than some kind of V bottom. More likely that you get some kind of U bottom. Immunogen, it's noticing that the IBB really had any kind of bounce, at least this morning, still off $2 today. And again, you're probably finding some kind of low, but again, these lows are not giving you the kind of instant gratification in a V bottom. This one did test its low October 1st of $9.25, 2.3 million shares with 1.4 million shares. But you normally want to have 3 days after reversal before you start getting into it. And today's light volume, higher than open move so far, is not instilling any kind of giant belief that the market's just going to go up, up, and away. Intuitive Surgical's been bouncing off resistance levels, and it's still up here today. It had a good, I guess, a decent earnings release, but it's not finding a lot of love up here. Your high volume test comes from July 22nd at 564.86. They had 1.3 million shares. January 13th, you had just under 1 million shares. And of course, on the 22nd, you had 740,000 shares. So we're up here with not a lot of energy. Earnings look good. The problem with this stock is you have the headline risk of somebody like Bernie Sanders or Hillary Clinton coming out and raining all over this. And that is probably the only bet that I could make, is that someone's going to come out and talk about the healthcare sector as something that's making too much money. And so you probably would have to be short it. I just don't see a good way to get back into that. What else do we have out here? A few. Wanted to take a look at some of the other one. Pan American Silver. I was hoping some of these dogs would give a little bit better signal out here for the lows, and at least there isn't a lot of volume. There is still significant energy on the way down in these stocks. They have bounced somewhat. You got to say that probably at least the miners over the last week have looked better than they've looked as far as a buy signal in the last 6 months. But that does not mean we're out of the woods in gold. You have to look at that dollar index, and that thing is solidly in the $99 level. What happens to gold when that hits 100 and that psychological level? We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back ahead, let's find it here. Dan in Clearwater asked about shorting Take-Two Interactive. And I think you could probably talk about shorting it. He was thinking about buying the puts, and I haven't had a chance to look at it. I couldn't bring up my IV service and look at the volatility. I am not one to buy puts in a market that has already had and seen the VIX sky high. I like to buy puts in a market where the VIX is around 15. By the time you get to 20, it's about 10 times harder to make money in a put because, of course, the premiums will decay normally faster than the stocks move. And that's why I'm much more likely, even on something like this, to probably short the equity right now than actually try to take the puts. If we go back and look at my successful put buy on BIIB last summer, where basically cratered, you've got to get into those things when the premium is not high because if you're going to make a bunch of bucks, because that premium, especially now, everybody's bearish. The premium is going to be sky high, and they're going to pull the premium out as soon as it moves. So your leverage probably not as well and as good as you would think. I do like the fact that the energy was extremely better on the way down. It did have a test of the, what is it out here, the November 16th low. But I'm going to tell you that it's going to be incredibly difficult, nay impossible. But I have two parameters for buying puts. That is probably the overall IV of the stock is probably less than 30%. And I like to see the VIX in the broad markets is something like 15 or 16 or something or less. It's just very tough. I've gone back and done a lot of work on trying to figure out what the odds are when everything gets marked up as high as it is right now to make money in puts. Can you? You can. I just hate the odds. I think that your odds are better right now in a bear market of actually shorting the equity than then buying the puts. If you're going to buy puts, you've got to buy them like on Thursday for Friday expiration, where there's just not that much left in them. And I think, we could probably fool around, maybe even into the end of February, on this bounce higher in the markets. Only then to see everybody quit shorting and see this market finally roll over. But now that I've got the data to back me, I'm pretty much going to be pushing my hypothesis that I've had for a long time, and that is that markets, even in a bear market, pretty much crater when everybody is done and disgusted with shorting again. They make a lot of money, and they short, and of course they get squeezed out. Stock market moves higher. Eventually, all those people that just have to be short all the time will give up, and that allows you to have the kind of market drop and momentum to get the market moving and for you to make big money. The downside is that you have to keep your hands in your pocket and avoid trading these small moves to catch the big one. You don't always catch them, but at the same time, I've avoided a ton of pitfalls. I would say you'd probably look for a 50 or 618 retracement on this and just pull the trigger on it. And I would probably avoid puts unless they are incredibly cheap or you're a day away from expiration. You know what you're getting into. We'll see you tomorrow. Same bat channel, same bat time. Sell when you can, not when you have to. Cover when you can, not when you have to. See you tomorrow. See you.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.